study for the SEC because it really has caused us to go back and look at some cases that are very old and ask how they apply to a technology that's very new. So the Howey test, which Todd mentioned, is the key test in this area to figure out whether something is an investment contract. Often it's easy to tell something is a security. If it's a stock, it's easy to tell, or a bond, it's easy to tell that it's a security, but not so easy when it comes to investment contracts, which is a much grayer area. And so what the Supreme Court did is they set out a test in the Howey case, which dealt with orange groves, nothing related to crypto, and they laid out a test for trying to understand whether something did qualify to be a security. And so that's the test that we're primarily applying now when we look at some of these initial coin offerings to see whether they were done in accordance with our securities laws. We're taking the Howey test and we're saying, okay, well, did these people put their money into a common enterprise with an expectation of profits that were reliant on the efforts of someone else? So that sounds nice, but I think from my personal perspective, the whole using Howey to look at crypto has made me question whether Howey needs a little bit of a refresher anyway, because I think if you read Howey the way that it can be read quite, and the way courts have read it, it can be quite broad, so that not only will it pull in lots of crypto, which many initial coin offerings are nothing other than traditional securities offerings with a different label on them. And so if you're doing something like that, if you're raising money for a project and you're selling essentially interests in that project, that's a security. We're going to regulate it as a security. If you're doing an offering, you better make sure it's compliant with our rules or fits under one of our exemptions. But I think that as we see crypto mature and as we see tokens becoming more utility tokens and really being used in decentralized networks, we're going to face harder questions. And those are the questions of maybe something started out as a security and needed to be offered that way, but maybe now it's really not a security anymore. So that's one of the areas we as an agency need to grapple with some more and need to provide some more guidance on. People have questions about it, and I think that's one of the areas of regulatory uncertainty that's driving people to say, you know what, I'm just going to avoid U.S. markets altogether. But it has been, I think, eye-opening for a lot of people as they think about how to apply old law to these new issues. And again, sometimes it's very obvious and it's very clear that these are actually not anything very new. But in other instances, it's not as clear. And I think people are worried about, how do we figure out when we're no longer under the securities laws? So that's an area where we need to spend more time.
So in the meantime, I think the SEC's developed FinHub, which is like your own privacy, a private kind of area to ask questions and, freely interact with the SEC if you're a cryptocurrency startup or, even if you're a financial institution that wants to get into it. So it seems like you're taking we're not going to come to the table with a bat. We're going to come with an open conversation to kind of help these startups get a better clarification. But when it comes to the hindrance of institutional investors getting involved, if you're dealing in a lot of money, you do need regulatory clarity because it may put a certain investment class at a risk threshold to where the reward isn't quite at the risk level. I mean, if the SEC steps in and says this is a security you have to stop, then pretty much the whole project stops. Or if you're an exchange and you have what's called a decentralized exchange where you simply publish a smart contract and you're fined by the SEC because they have determined that one of the smart contracts is interacting with something called the Dow token, which was deemed to be a security. So at that point, this happened back with Ether Delta. They were fined $300,000 by offering the Dow token to be traded on their decentralized smart contract. So in essence, it's one peer working with another peer to exchange value through a computer program. Now, there's a First Amendment issue with that am I an exchange if I post a line of code that allows people to interact? And where is that line in the sand to where my First Amendment right to publish code on GitHub all of a sudden becomes known as a centralized hub exchange to where I'm a broker? So I think that kind of clarity would also help. Do you?
Let me touch on a couple of issues that you raised. So first, as to FinHub, that is our website, web page that we encourage people to go to. If you have questions, there's an email address you can email in there, and you'll get in touch through that with our crypto team, which is great. Then you can go in and talk to them and lay out, if you've got a project, you lay that out. You can talk to them. If you've got a question about how the securities laws might apply, you can go talk to them. Obviously, you've got to get your own lawyer if you really want an answer, but you can kind of get some feedback. And if you want to get we issue something called a no action letter, which essentially said this, our staff does, which essentially says the staff will not recommend to the commission an enforcement action if you do X, Y, and Z. So that can be another helpful thing to do. Now, the funny part about FinHub is that I came to the SEC in January of last year. So I've been there, a little over a year. And one of the first things I said is, couldn't we have some kind of centralized place where people could kind of have a discussion in public on our website about some of these issues that are troubling us in the crypto space? So it took me, I think 6 months before I got them, maybe even more, before I got them to set up a web page. So innovation takes a long time when you're dealing with traditional regulatory agencies, even if the innovation means just setting up a web page. But anyway, we do have a great team of people who are really interested in this space and are working hard on it. But as Todd raised, we do have a number of issues that are really quite difficult in this space. So one thing that I've been trying to encourage is we need to open avenues so that institutional participants can feel comfortable enough, can take the risk to get engaged in this space. And there's some institutional actors that have been very out front and said, we're getting involved. So you've got Fidelities of the world, for example. You've got a lot of the big trading firms are trading in crypto assets, Bitcoin and other crypto assets. So there is institutional interest. I would like us to push forward to allow for answers to questions that would allow for more institutional interest. And again, I'm not arguing that crypto is or is not the solution to problems, but it's an asset class that I've heard a lot of folks are interested in getting exposure to. And so I don't think it's the role of the SEC to step in and say, no, we don't think this asset class is right for you, so we're going to decide for you that you can't get involved. So one of the big questions that has arisen time and again for our staff, for different parts of our staff, is custody questions. So how can we have custody rules which are all about proving that you've got the asset that you say you have and that it belongs to you and that it's safe from loss or misappropriation. So that's easier with some types of assets than it is with others. And I think in the crypto space, there's some aspects of it that are very easy because the blockchain is public. But there's some aspects that are more difficult. You say you have a private key, so you've got to show it to someone that you have it, but you've also got to demonstrate that that you're the only one with the private key. And there are lots of issues around storing private keys. How do you safely store cryptocurrency? So those are some of the things that we're grappling with now as we think about allowing broker-dealers and exchanges or exchange lights. We have alternative trading systems, which are essentially a different form of an exchange. Broker-dealers are able to set up these ATSs to trade securities. And so if they want to trade in this space, what needs to be done? And then on another front, we've gotten quite a number of applications to trade exchange-traded products, which could be an exchange-traded fund, for example, which is essentially a mutual fund that trades on an exchange. And so, again, issues about custody come up, issues about the underlying markets, so there was last year there was an application by an exchange to list an exchange-traded product that was backed by the Winklevoss brothers. And my colleagues denied the application. They said that can't trade. I wrote a dissent from that because I really was concerned that we were kind of trying to look through to the underlying market and say, oh no, we're scared of the Bitcoin markets because they don't look to us like our regulated securities markets look. And my response to that is, well, neither do the gold markets, and we have securities that are based upon gold. So there are lots of markets that underlie our products that trade on our markets that don't look just like our markets. And another thing I think that we miss in this is that there is a natural tendency for institutional players to come in if they see something that's unregulated and to sort of think about self-regulatory solutions. So I've had people come and talk to me about self-regulatory efforts in the crypto space, and I think those are a valuable step to saying, let's bring some regularity to this space. So then Todd raises also the issue of truly decentralized exchanges. So one can imagine a world in which there's smart contracts that are out there, they're created, they're open source, and they allow people to exchange securities without really the intermediation of anyone. And so what if something goes wrong? We have fairly stringent rules about what exchanges can and can't do, but in this situation, do you really even have an exchange? We brought one case in this area, which was the Ether Delta case that Todd mentioned. I think there are distinguishing features of that, of the facts of that case that made it an easier case for us to bring. But if you really had a truly decentralized exchange run through smart contracts, there are some challenges for us. And I think one of the areas I'm most concerned about looking forward is that we can't say that someone who creates a contract and puts it out there is on the hook for whatever else someone may do with it down the line. We can't, unless you're explicitly creating it for use in some illegal activity, we really can't go back to the writer of that code and say it's your fault that something happened. And so it behooves us all to think about those issues now as soon as possible. And I think we've gotten some feedback from some people in the community who are a little bit worried that we're walking down a road where coding itself is going to become an activity that we're trying to regulate. And so this is, part of the brave new world. There's some really difficult, interesting questions for us to grapple with.
I like that. It almost goes back to the initial thought about the SEC. We're not out to pick winners or losers. We're not out to pick and choose which companies, which securities, which assets classes are best for you. We're out to make a safe, free market for everybody to operate in to increase innovation and prosperity. So I like that opinion. And, getting back to the Ether Delta thing that you were talking about, First Amendment rights. I mean, if I write a book and someone totally mistranslates it and uses it as, some terrorist act, then is it the author's fault? At that point, what can't be kind of changed around to be used for a nefarious activity, and what's the burden of proof? And I think that's where the courts are going to step in, and case law will decide that line in the sand. Is that right about?
Yeah, it is. The First Amendment interaction with the securities laws is always an interesting one for me to think about because, part of what we do in the securities laws, I think the core of what we do is we try to get to investors and potential investors information that they need to make a wise investment decision on their own. And so we sort of focus on getting them the material information that they need to understand the financial well-being of the company. But part of what goes into what we do is we do have some, you can't say part of the truth but not the whole truth. You can't omit a material fact. So in some ways we are telling people what they can say. There is an interaction between the securities laws and the First Amendment, and the First Amendment might not always work in the way that you would think it would work, in the sense that you can't just say anything. If you're putting yourself out there in this space to raise money from investors you take on certain obligations, and that's just the way it is. But a couple years ago, we had a case where this related to something unrelated, probably the world that you all mostly work in, but the Congress gave us a mandate, and they said, we want you to get companies to tell us whether they're using conflict minerals. So these are minerals that are mined in the Democratic Republic of Congo or surrounding nations. So query the wisdom of that statutory mandate, but that was what Congress told us to do. And so there were First Amendment questions raised in connection with, can you force a company to basically say it's using conflict minerals? And it's a very interesting sort of side note, but it does suggest that there are going to be times when our rules come into conflict with First Amendment principles, and we have to think about that carefully. And that's why I am glad in this space that there are people who are raising those questions and saying, look, surely you can't tell someone that writing code there's something inherently wrong with writing code. Now, again, if you write a code to do something criminal